All right, bridge to buy, smart strategies for buying and selling at the same time. Get a lot of questions about bridge loans, right? So here's me. I've been in the industry 22 years, last 15 with American Pacific Mortgage. It was their first retail branch, actually first Bay Area branch for the company, and been ranked within top 1% of originators, top 100 a couple years there in a row. And really my hope is to just kind of better encourage those that we work with, both B2B, business business, or partners, of course, clients, right? Want to do all we can to really just help encourage those looking to buy or sell or invest in real estate. So American Pacific Mortgage. The trademark here is creating experiences that matter. I love that. By the way, has a little TM icon there, right? As you see in the text. But really, our thought is your success is our success. When you win, we win. We want to create the best experience we possibly can to truly bless the clients and those that we work with. So here's our agenda today. What is bridge to buy? We're going to go over some options: bridge loan, buy before you sell programs, home equity lines of credit, rent out your current home, contingent offer, departing residence, seller pre-lock, and finding out what is right for you. So what is bridge to buy? And why do you need one? Buying a new home before selling your current one can feel risky, but it doesn't have to be. Whether you're upgrading, relocating, or unexpectedly finding your dream home, there are strategic ways to manage their transition. And here are some options: bridge loan, buy before you sell, home equity lines of credit, rent out your current home, seller pre-lock, departing residence items, right? There's contingent offers. There's a lot of things that we're going to go over here. So, really, option one is that bridge loan. Bridge loan is a short-term loan that allows you to use the equity in your current home to purchase the new one. How it works: borrow against your existing home's equity, use the funds for your new home's down payment, repay the bridge loan once your current home sells. Now, there are some pros and cons, right? So, the cons, of course, higher interest rates. You're going to carry two mortgages, or you may have to temporarily. And there is a balloon payment risk if the home doesn't sell, usually within 3 to 6 months. Pros: fast access to the funds. You can make non-contingent offers in this ideal and competitive markets. So option two is buy before you sell programs. These programs are designed to allow you to purchase a new home before selling your current home without traditional financial constraints. So how it works: remove the pending sale contingency from your new home offer. You get up to 70% with a 0% interest bridge loan. Exclude your current home mortgage from your debt to income ratio. So the cons is limited availability, but we offer this. We have the availability here for you. You must qualify up front. Fees vary by provider. There's another presentation. Shoot me a message after this. I'd love to send that to you. But the pros are, of course, no monthly payment, easier qualification, home sale guarantee if needed. Option three, home equity line of credit or HELOC. That's a line of credit revolving line that's based on your home's equity that offers flexible access to cash. So how it works: you withdraw only what you need for your next home purchase, pay interest during the draw period. Good option if you're keeping your property as a rental for a year or more. I've actually done this several times over with my rental properties. And yes, I think it's a great option. And it allows pros here interest only payments during draw period, lower rates than personal loans, which are 10, 11, 12%. As you know, this could be, it's basically based off the Fed rate. I won't quote the Fed rate. Is this presentation, candidly, tomorrow we have Fed day, so we're waiting to see if the Fed actually lowers that rate. So it does follow that. It is reusable, it's flexible. Cons are it's a variable rate, could increase over time, must qualify. Also owning, you may carry two mortgages if the rental income doesn't cover it, right? So option four is rent out your current home. Instead of selling, convert your current home into rental property, help cover mortgage costs or generate income. This is something I've done. I have a whole presentation on developing wealth in real estate. I even wrote a book on it. If you want any of those items, simply shoot me a message. Happy to send those out. So how it works: secure a tenant or lease agreement, use projected rental income to help qualify for a new mortgage. Of course, there are pros and cons here, right? Pros: long-term income. Keep your property as an investment. May help qualify for the new purchase. The cons: two mortgages to manage, tenant property issues may arise, and then it may not fully offset costs. There are upkeep costs for that property and the property you're buying. Those are all things to consider. And if you have questions about that, again, I have a full presentation. I've written a book on it. I kid you not. So feel free to reach out. Happy to have that discussion with you and unpack that further. Option five, contingent offer, an offer on a new home that depends on the selling of your current one first. So this is one thing where it's, if you're going to buy a property, you can, but you want to sell your property that you currently have first. So the pros, lower risk, ideal for tight budgets. Cons, less attracted sellers, and it can delay or lose the desired home, especially if there's multiple offers on a property. Option six is departing resident lending options. So loan programs allow you to exclude your current mortgage from debt calculations if you intend to sell. So we have certain programs that may allow you to do this. So you provide documentation with intent to list your current listing. We need to confirm 20% or more equity with a verified appraisal. And then, of course, we want to look at a clean mortgage history. So it's not available with all lenders or all of our investors. Strict reserve and documentation requirements are the cons, but it does increase your buying power and it can reduce your debt load. Seller pre-lock program. This is incredibly important in 2025. Got a lot of requests around this, but it's an exclusive program that we have, allowing sellers to pay a fee to lock in an interest rate for their future buyer, which is super cool, right? It's crazy. But how it works, the lender offers a forward locked mortgage rate before the listing. The market home with this buyer benefit. You can't advertise the rate, but you can say that there's a special offer for the buyer. When you finance your next home with American Pacific Mortgage, the pre-lock fee can be credited to your new loan. So the cons, upfront fee required. You can't advertise the exact rate, but the pros are you stand out in high interest rate markets, attract more qualified buyers, refundable fee if you finance your next purchase with American Pacific Mortgage. So question here is, what bridge is right for you? You have to consider your equity, your timeline, financial flexibility, and your risk tolerance. So we're here to help. We'll go into some Q&A here, but definitely any questions that you have, reach out, call, text, email anytime. Visit me on social at mike.belfor. And yeah, looking forward to these questions. I see actually have quite a few here. All right, I'm going to stop this recording so we can answer those.